Well, here we go with less than 24 hours to the DraftKings earnings, and it's the time where it's a little bit nervous and a little bit exciting to see what's going on with this business, one of my favourite companies out there and a big shareholder of this business. And today I just wanted to update a few things that I'm seeing going into earnings, a few things that have changed. We mentioned it on Monday, a few little things that have changed since then, and I think it's important to talk about. And and with no doubt I've just totally jinxed the earnings now by doing this video. But hopefully we get some good numbers out from the company tomorrow, and I'm sure whichever way it goes, we'll see a big reaction in the share price. Now, yesterday, recently we've been doing quite well on DraftKings. It's been on a pretty good run this week, and we went back into the $16 range actually yesterday. We actually even touched into the $17 range yesterday. And we had a pretty good day, and we'll look at the reason why, and that potentially some optimism going into earnings. But I just had a look at Seeking Alpha's estimates for their earnings coming up, and they have a consensus EPS of a loss of $1.06 and a consensus revenue estimates of 331 million. And that was actually, I believe, a little bit lower expectations yet on the EPS and on the revenue than Yahoo Finance. So Seeking Alpha, their targets are a little bit lower than what Yahoo Finance are expecting. But I didn't notice this on Yahoo Finance. Since we covered it on Monday, I noticed their average estimate had just been ticking up slightly. So a little bit of adjustment before going into earnings. Their expectations had just been lifted a little bit this week. So I don't know, does that give them hard numbers to kind of beat? Or are they kind of looking at a few companies that reported this week and going, actually DraftKings should be okay with these numbers when they come to earnings? Now, if you do look at the record of DraftKings when they do report earnings, you'll see here DraftKings has beaten EPS estimates in 3 of the past 8 quarters, so just below 50% record on the EPS side of it. And funny enough, DraftKings, even though it's a growth stock, and it's very much focused on growth, and profitability will come further down the line as the states get more and more mature, like the older states, and they enter profitability. And all them states will follow the pattern that's been out there, and it keeps happening. Even though it's very much focused on revenue growth, DraftKings always seems to get judged on EPS. So coming into this quarter, I think same again. I think the big move will be on this, even though it shouldn't really be. I think, and when you look at the DraftKings EPS guidance, you can see there's the average is 1.04. The low side is 1.22 and the high side is 0.76, even though there's a massive range on EPS because no one has no idea where this is going to come in at. It always seems to get judged on its EPS, so we'll see what happens there. But if you see the revenue side of it, they say exceeding revenue expectations in 7 of those last 8 reports. And if I remember correctly, the one time they didn't come in on revenue was when the hold was really weak. That really affected the revenue, and I think I remember that earnings report. It was this year, I believe, and I remember the stock did drop like 20% in the end on the day when that happened. So yeah, obviously revenue is key. I think if revenue does miss expectations, then we would actually see the stock not do very well on the day. But I think ultimately it'll probably go down to the EPS. So that's why on the day I don't actually too much look at the share price, because that will be reflecting what's going on in the EPS, not what's actually going inside the business, and making sure that a growth story continues with DraftKings. Now, like I said, one of the big things that affects DraftKings is that hold rate. Hold rates will obviously affect the revenue side of it and also affects the profitability side of it. Now, going into Q3, what do we know? Well, Q3 is very volatile because obviously one of the big things that DraftKings makes money off is the NFL season. NFL season is key for DraftKings, and in the Q3 we only have, I think it's 3 weeks of the NFL season. So that means the hold can be very, very volatile in this quarter. You imagine across a full quarter, and you've got the NFL for the full quarter, your hold will average out a lot better over more games over a 3-month period. When you've only got 3 games in that quarter, that hold can be very volatile, because if you have 2 weeks where the hold is really bad and then 1 week where it's average, it's going to absolutely kill you. Same round is that if you have 3 weeks and the hold is unbelievably good, that's going to massively benefit you. So there's a lot of volatility going into these earnings. Now, what we do know going into these earnings is the early indicators is that going into this first quarter, first of all, the betting volumes were phenomenal. We know there's been a surge once again of the volumes. We know that there's been such a demand here. and there's been a lot more records being beaten in a lot of states. So we know the demand is good out there from what we've seen. And also the suggestion is the hold is actually going to be very good in this quarter, which is key for the reasons we've just said. Because if we look at some of the NFL scores that have happened so far, there's been a few shockers. It's been quite a bit of a shocker season in the NFL, and if you follow that, you'll probably know that. Personally, for me, I'm a Giants fan, and I can't remember exactly. I think we're 6-2 at the moment, which is unheard of for the Giants. And also, some of the big teams that for example, quite often the big teams have a good following brought in by a star quarterback, and you look at the likes of Tom Brady, recognisable in the NFL. The Bucks that he plays for, quite a big favourite. They've had a terrible season. Aaron Rodgers, Green Bay Packers, they've had quite a few upsets. Lamar Jackson, the team that he plays for, the Baltimore Ravens, I think they had a shocker result with the Giants beating the Ravens. So there's been quite a few shocker results. So that should indicate that the hold should actually be pretty good this quarter. So we have the signs at the moment that the volumes were good, and the suggestion is the hold is going to be good because of some of the results that has come in. Now also, when we look into DraftKings, what we talk about the share price is it's been on a good run. And yesterday, actually, if you looked at pre-market, DraftKings was up over 6%. Now, unfortunately, as we know from the early video, the Fed came out and the Fed decided to speak and let Jerome Powell go on that stage again for that question and answer session. And he did what he does and he tanks the market. So DraftKings was actually having a really good day yesterday, and pre-market was really strong, and then it massively sold off. Now, the reason why there was a pop in DraftKings share price in pre-market yesterday is because of this company, Caesars. So I'm sure most of you guys know Caesars Entertainment. Obviously, they've got a few properties, also, of the casinos that they own. And this stock here is not really a stock that I'm too interested in. But what was very key is they actually came out and brought earnings out. And their earnings were not too bad, but there was a key bit that a lot of people stared at and went, okay, if Caesars is doing this, this is going to be very key for DraftKings. And that is the digital part of the business. The digital part of the business is very much what DraftKings is in. Now, if you look at their revenue exploded. So they went from 96 million in 2021, and that went up 120% to 212 million this year. And that's actually, if they do keep growing at this sort of rate, it's not going to be too long until that digital part of the business becomes a major part for this business. So you'll see here that the growth is really good. So people looked at that and thought, oh, another sign of a company doing really well. Good numbers coming out here. Very exciting times. But this is the thing that really excited investors like into DraftKings, for example. So they grew at insane rates. But what Caesars did is they went from a net income loss on their digital platform of 190 million down to 63 million. So there was a massive reduction in losses here. So people were like, okay, the losses are reducing. But the thing is when you look at the growth side of it, people went, okay, the loss is massively reduced. But when you look at the revenue, there's still insane growth. So these companies here can reduce the losses, potentially move to profitability, and then still maintain insane growth. And that's what everyone was like, oh, so DraftKings, you're telling me that this could be quite a profitable sector. And this is what most of Wall Street and most of the bears are still struggling about. The big thing they use against these sort of stocks is to go, but they're never going to make profitability. Look at the cash they're burning. And they don't really realise how profitable these businesses are going to be. These businesses are going to seriously reduce these losses, and then they're still going to put insane revenue growth in. And that's one of the key things that people are forgetting about this. And it's very much the same when you look at the likes of DraftKings. DraftKings gets so much negativity because of the cash burn, and people never dig inside the business and go, but if you actually look at the business, 10 of their states are going to make profit this year. So their business model proves they get to profitability. And the more these states keep growing and going into profitability, the states that mature are going to fund the rest of the business. And as more and more states come online, that's going to just keep driving the revenue up. The moving to profitability, the profitable side of the business is just going to keep the business going up, and that's going to fund the business. And at the end of the day, if someone like a DraftKings wanted to be profitable, they could be. Because what they do is they just go, okay, we need to conserve cash, cut the marketing. They're still going to be massively profitable. They're still going to have really good revenue growth. They're not going to have the revenue growth that they're going to potentially have if they do the sales and marketing and potentially the market they capture and the market share. Capturing that market share for the long term, and then customers stay with you for the long term and generate your revenue growth and profit growth. Take that time early on, get that customer base really early. But that's what could happen. And I think yesterday this earnings report was a very key one that Wall Street kind of like went, whoa. Even though there's already a lot of signs that this is going to happen, I think it was just another one here. And obviously, with this news here, it led, a stock like DraftKings to pop up in pre-market. Unfortunately, it gave it all away because of the Fed, but hey, never mind. But I also think this was really important as well because, we don't want to have too much of a rally into earnings. We don't want to be, steamrolling into earnings, because if you steamroll into earnings, your stock's up already. You already have a lot of positivity priced in going to them earnings. That could sometimes have a negative impact on your earnings, and you can kind of give it away. The same way that it works if you're so beaten down going into earnings, very, very low expectations, stock not doing very well, and then you come out with okay and good earnings, sometimes that can help your stock go up quite a bit. So yeah, I think even though this is a bit, short-term stuff there, I think that also helps not going into steamrolling into earnings too much. So maybe a little bit of a cool down yesterday rather than having another 6% jump. That does help a little bit anyway. So anyway, hope you enjoyed the video. Obviously, big day tomorrow. I think normally they drop the press release around about, for us in the UK, around about 12:15ish normally. I think that's when I've noticed most of the time it's dropped. So yeah. Let's see what happens. Smash the like button. See you in a bit.